Good morning and welcome to NYSE TV Live. I'm Kristen Schuller here in studio at the Stock Exchange. Well, inflation data enters the spotlight this week as fresh consumer price and wholesale price data will give the Federal Reserve new factors to consider when mapping out its rate cut timeline. Meanwhile, retail sales data and a slew of earnings will also play a pivotal role in dictating market activity this week. We've got a lot to get to this morning, and so here's what is on tap over the next hour. The Philadelphia Eagles took home the Lombardi Trophy late last night, but there were many more winners from Super Bowl Sunday. Seth Schackner, Managing Director of Strat Americas, will tell us which companies came away victorious during last night's ad blitz. And I'll speak with Tether CEO Paulo Arduano about the stablecoin's place in the digital asset ecosystem and how a new partnership aims to disrupt real estate transactions. Then at 9:30 a.m. Eastern, NYSE-listed American Healthcare REIT will kick off this week's trading when the opening bell rings. We'll speak with the firm's chief executive, Dan Prosky, about his company's biggest goals for the year. All right, well, let's take a look at markets. We begin there where we always do, of course, breaking down the latest market action here on Wall Street. Stocks are pointing to fractional gains at the open, and joining me now with more is Gaurav Malik, Chief Investment Officer at Palace Capital. Gaurav, thank you so much for joining. And how should investors be looking to start this week?
There's a slew of data coming in this week. So first, very happy to be on NYSE TV that investors should pay attention to. But I would also suggest to investors that let's wait for the earnings season to come to a full end to get a better sense of what the market is going to look like. There have been quite a lot of surprises in the market this time around. We've seen pretty good earnings growth across the board, but we've also seen leadership move around. Obviously, tech is not as hot as it was last year. Our view is that as far as inflation is concerned, we do see that coming down in line to about 2.3, 2.5 by the time the year ends, and certainly in line with Fed's expectations by the middle of next year. To some extent, I would tell investors as well to ignore some of the noise that's coming. There's too much volatility around each macroeconomic data and release that comes out. But the broad trends are very consistent with our expectations. And that's what investors should focus on. Reasonable growth, consumer is still looking good. Inflation in an 18-month window will fall in line with Fed's expectations. There is policy uncertainty, but we'll wait for that to clear up as the year progresses.
We've seen a lot of shakeups certainly happening with this new administration. We know fundamentals does historically drive the market, like the economy and earnings, as you mentioned there. But some of the changes that we've already seen, Gaurav, with this administration, how should investors be reacting to that?
Yeah, so I would remind investors to think back to like the 2016 period where we had a lot of changes occurring, kind of the similar language, perhaps stronger today than it was in 2016 around tariffs and policy and DOGE and all those things. But one of my observations of that 4-year period was that American companies are super dynamic and super flexible. Most companies in that period were able to withstand the impact of tariffs through either changes in their pricing strategy, supply chain reconfiguring. And one of the things I always find very interesting about the US economy and US companies versus any other part of the world is that we're still in a period where we have tight labor markets, but wage growth is still not as high as you would expect in such a tight market with unemployment running at 4%. You're seeing about 3.5%, 3.6% in income growth, a bit better than inflation. But if that tight conditions existed in any other part of the world, you'd expect wage growth to be much stronger than what you're seeing. So corporations have a really nice ability to be flexible, to be able to keep pressures from costs down, to be able to withstand the pressure of these types of policy uncertainties. And I think that's what investors should pay more attention to. Companies really do fantastically in the US, and as you know, operating margins are running at all-time highs right now within the S&P.
Yeah, it's interesting, Gaurav. Of course, amid some of the recent choppiness that we've seen to start 2025, January still ended with gains on the month, and we do see that stocks are still pretty close to record highs, just a few percentage points from them, if that. How does the valuation of the major indexes look at these levels?
Yeah, of course, valuation is challenging, and you've seen that sort of play out most recently and most dominantly in the tech space, which was a space which was the most expensive. So yeah, DeepSeek contributed to it, but I think it's a lot about the fact that there was all these stocks were priced to perfection. I think what investors should pay more attention to is that the valuation still in the equal weighted index, while high, is still not at the same levels. Many of the other markets, whether it's small caps or you look at international markets, which are playing catch up, there you still see some reasonable value. You still see earnings growth that's pretty robust. And I'm very confident, in fact, that with the, call it the 175 billion that Google, Alphabet, and Amazon were talking about, their investments in AI, and the whole sector is looking to invest as much as 500 billion over the next year or two between R&D and CapEx. I think that will have a payoff, and ultimately these companies will bounce back. I do think they're some of the most innovative companies, so I think there will be that bounce back occurring. But in the middle of it, yes, you will see some bullishly in that period. Valuation a bit of a concern. I agree with that, but I've also seen that there has been some valuation reset that has occurred in these companies. Maybe a little bit more to go down before investors should consider being strong buyers in these companies.
Do you think the broadening of the market gains that we've seen, Gaurav, beyond just the Mag 7, which we know really led a lot of the gains for the first 2 years of this bull market, can sustain?
I think it can sustain because what we are seeing, again, if you start looking at analyst forecasts for 2024, 2025 earnings, 2024 earnings were all about Mag 7. 2025 earnings forecasts do rely on financials, industrials, materials, many of these companies contributing a lot more to S&P's earnings growth as you look at this year. Layer onto the fact that we are still, I feel pretty strongly that the Trump administration, Republicans are going to do more and more to support the industrial base. There is a lot of lagged effect to come from the Biden administration's industrial policy, reindustrialization policy around semis, around the Inflation Reduction Act, which will have payoffs over this period. So I do think that the rally in some of these non-tech companies, non-tech names, can continue for some more period of time. Again, earnings will tell us whether these companies have the ability to deliver on the earnings growth that's priced in. But it's more and more looking balanced in terms of where the earnings growth for the whole index is going to come off between tech, Mag 7, and non-Mag 7 companies, which is encouraging.
So when it comes to earnings, Gaurav, certainly we've made it through some of the biggest technology companies out there the past 2 weeks or so. What earnings are you focused on this week?
I think that we do want to see what occurs with the remaining companies in the tech sector. We do want to see what's going to occur with the broader industrial materials earnings that are going to come out later on this week. I think that's where we'll be paying attention to. We hate to comment on individual companies, but generally speaking, those would be the areas we'd continue looking forward to and seeing how it broadens out as we look at earnings occurring both the small cap segments of the market and also as we look outside of international markets as to what is occurring on those areas too.
Gaurav Malik, thank you so much for joining, especially to break down the markets this morning. Gaurav is the Chief Investment Officer at Palace Capital.
Thank you very much.
All right, well, coming up, companies put their creative juices to the test with a wide variety of Super Bowl commercials last night. And our next guest will break down which campaigns won and lost. That's next.
Today we're taking you behind the scenes of Summit One Vanderbilt. This extraordinary destination offers stunning views and immersive experiences, providing a truly unique perspective on a city that never sleeps. That was the most incredible elevator ride I've ever experienced.
Yes.
How long did it take us to get up here?
35 seconds to go from the ground floor all the way up to the 91st floor. It's pretty incredible.
Pretty incredible, and the experience starts the moment you step into the elevator.
Absolutely. We take you from one room and one experience to another to help transition you. And right now in the Hall of Light, we're about ready to go into Transcendence. You ready to go in?
I'm ready.
Perfect.
Let's go.
Let's do this.
Wow, this room is amazing.
Wow is right. We are in Transcendence. We are on the 91st floor here in One Vanderbilt, and this room truly is spectacular. It's probably one of the most Instagram locations in the entire world. We are in probably the most famous and most sought after room in all of Summit. We're in Affinity. And what this really speaks to is Kenzo's vision of play. By no means is One Vanderbilt or Summit an area of being passive. We encourage you, we want you to be part of the installation. Here, you become actually involved within the installation of the space. Obviously, from the balloons themselves, people that come into this space are able to make it their own. They're able to come through and actually see the world in a much different component. They really are. It's a unique view that you're not going to get anywhere else in the world. I would even encourage you, quite frankly, to help come through with me. So we have people who come here who automatically know where they want to stand, what they want to wear, and quite frankly, the type of picture they want to take, because they know it's going to be shared all across the world. And that's the most amazing thing here. People are evangelizing the product for us. They're evangelizing the Summit brand. And in doing so,
welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, football fans tuned into Super Bowl 59 for the matchup between the Chiefs and the Eagles. Music fans couldn't wait to hear Kendrick Lamar perform at halftime, and many viewers also turned in for the commercials. Well, for more on this, I want to bring in my colleague, Trinity Chavez. Trinity, good morning.
Hey, Kristen, good morning. That's right. The Super Bowl isn't just one of the biggest nights in football, but it's also the biggest stage for advertisers, with brands spending millions of dollars for just a 30-second spot. So who won the night? Which ads flopped? And which trends dominated the commercial breaks? Well, to find out, I do want to bring in my next guest, Seth Schachter. He is Managing Director of Strat America. Seth, it's great to have you.
Good to be here. Good morning.
Now, this year's Super Bowl ads are packed with A-list celebrities, from Ben Affleck to Matthew McConaughey. Matthew McConaughey actually, I think, was in 4 different commercials throughout the Super Bowl. So do you think that star power will drive brand impact, or are brands relying too much on big names over substance?
I think, it's a little bit of both. I mean, I thought broadly the ads were fun but kind of tame last night. They definitely, I think, moved away from hot stuff like politics and kind of, went on the lighter side for the most part. But yeah, and there were so many promos of shows and streaming releases as well. But the ones that did have big stars, I mean, the Billy Crystal one really stuck out to me in a big way. For those who saw the original, Harry Met Sally in a Delicatessen, I thought was great. And there was some spots with Beckham and Matt Damon. But I do think that the celebrity factor was probably a big part of kind of the traditional mix of what advertisers were trying to do this year, for sure.
I have to say that was one of my favorite Super Bowl commercials of the night, seeing, how Harry Met Sally reenacted there at Cat's Deli, a New York staple. But, as we're seeing a strong push for nostalgia marketing with ads like Pepsi's Challenge Revival, and Budweiser bringing back to the Clydesdales, why do brands keep on turning to nostalgia? And does it really resonate with the younger audience that's tuning in?
It's a great question. I mean, I think, look, the Super Bowl is the biggest night of the year for a lot of things, certainly for music as well. And, 115 million people are tuning into it. And I think it's meant to be a night that brings a lot of folks together. The NFL is on, I think, a different level with most brands in Madison Avenue than just about anything. Those ads are locked up at the upfronts, a long time ago. And there's a certain aspect of Americana and culture and our history that's in there. And I think you tend to see that, certainly Budweiser and some of the classic properties keep coming up. But even the stuff like Dunkin', I don't know if you can call that nostalgia, but it's certainly stuff that tends to bring people together. And I don't think that'll ever, quite frankly, go away. The thing that I think is interesting about these Super Bowl ads is that, it is a big, giant stage. And it's a huge opportunity to make an enormous impression. But a lot of the ad research shows that the ads actually resonate. They get engagement over time. People show up. They kind of like, particularly ones who aren't following the game, want to actually watch the ads like it's part of the show. And it can really be a very effective way to bring a brand into the market and get people to buy it or start using it. So it's got hidden effects that go on beyond just last night, and maybe the nostalgia helps that as well.
And from an investment standpoint, we've been covering a lot about the Super Bowl ads here on the show, just talking about, is it worth it? With the 30-second spots, Super Bowl spots are now costing upwards of $7 to $8 million. Do you think that investment is still worth it? And are brands getting the return that they expect, or could viral social media campaigns deliver a similar impact? What do you think?
I mean, I don't think there's anything quite like the Super Bowl from an American perspective. And it's also global as well. People stay up all night in Asia and Europe to watch it. So I think if you're a major American brand on Madison Avenue and you want to make the big splash, 100%. I think it's also interesting, some of our biggest brands, Nike ran, I think it was the first time in 27 years, a spot with Caitlin Clark. And also, the NFL did promos around flag football and women's sports. So, I think that there are aspects of brand messaging, brand marketing that aren't purely just about ROI. And so this is the biggest stage you can do it on. So, 100% these things are sold out, so I don't think you can really argue with it.
And on the topic of football, we're seeing a rise in athlete-led endorsements, with research showing that they drive about 2.5 times more engagement than traditional celebrity endorsements. Do you think athletes are becoming the new faces of brand marketing?
I hope so. I go to a lot of advertising events around the world, from Cannes to New York, and I think sports is an incredibly important part of the advertising mix. I see a lot of parallels with my industry of entertainment, and I think athletes have a very unique ability to influence younger generations. There were certainly some great spots around that, and yeah, I do, and I hope it's in a way that's more organic, and it's not just about taking a check and signing off on a product. And I thought that was pretty apparent last night. The stuff even with Beckham that came up was really cool and cut through some of all the advertising out there. So yeah, I think musicians and celebrities probably have some pretty strong competition out there as well now.
And Seth, we have about 30 seconds left here, but looking ahead, what emerging trends do you think will define Super Bowl advertising in the next few years? Do you think AI or interactivity or even metaverse will play a big role?
Well, if I look at it from last night, it was more about feel good and public service and public health and ads about cancer. And I think there's a do good, feel good aspect, public health aspect to some of the ads we're seeing, as opposed to, soda or cereal. There were certainly some fun ones for that as well. But I think you're probably going to see Madison Avenue a little bit more responsive on that side, because I think there's so much advertising and media out there. It tends to cut through the clutter. So I was really encouraged by that.
Well, thank you so much, Seth. It's always a pleasure having you on the show. Seth Schackner, Managing Director of Strat Americas.
Good to be here.
Switching gears a little bit now, one player is getting plenty of attention on and off the field was Philadelphia Eagles running back Saquon Barkley. With investing being top priority, Barkley is also putting his money to work. Ahead of the big game, Ramp, a financial technology firm, announced that the Eagles All-Pro has joined an investor. Barkley also starred in Ramp's first ever Super Bowl ad, so check it out.
Hey, should we pull Saquon off the field right now to submit his expenses?
You better not say yes. Switch your business to ramp.com.
You both are coming to the exchange today to share the major news announcement. Why don't you tell me a little bit more about it?
Yeah, so we just passed 200 million in annual recurring revenue, and I met you last time 15 months ago when we made the first announcement. And so we're super excited. We're growing 70% year over year. And it's just due to the amazing success that we're providing to our customers.
Abby, would you like to add to that?
Such a whirlwind being at Cribble. I'm so proud of us, and to take 4 years to get to 100 million and then start, double it in 14 months is pretty exciting space to be in.
That's hugely significant, especially the time period that it all occurred. So what would you attribute this momentum to, and how do you think they're going to continue to leverage this fundraise?
First of all, back to the customers, it's about the value that we provide to them. It's an underserved segment. It is people who are running the systems that run the business, and the top growing companies in the public markets are growing at 30%. We're growing at 70%, and it is all back on the value that we provide to customers.
Abby, from your vantage point, how are you going to continue this momentum with growing those client relationships as well as enhancing your bottom line?
Well, our number one value at Cribble is to be customers first always, and we're constantly focused on how can we do the next thing that solves the problem that nobody else is solving for them. And so one of the things that I'm really excited about is that when we talk about our solutions and our ability to provide a data engine specific to IT and security, one of the gaps that we had was that we were able to provide analysis, but not in real time. And we have an exciting product announcement coming up that I'm going to let Clint talk about a little bit.
You beat me to the punch. I'm so excited to hear about the new product. Tell me about it, Clint.
This is an add-on to our Lake product called Lake House. As Abby mentioned, the biggest gap was I need to be able to ask and answer questions of data that's arriving right now. And I need that to be fast. I need my dashboards to go quickly. I need my alerts to fire really, really quickly. And so with our new offering in Lakehouse, we can start.
Welcome back to NYSE TV Live. I'm Trinity Chavez at the New York Stock Exchange. Now, Adrian Mandy is making a splash in both The Night Agent and upcoming film Tatami. As Noor in The Night Agent Season 2, she already is a fan favorite in Netflix's #1 show. So to talk more about her role and what attracted her to playing this role, she's joining me now in studio at the New York Stock Exchange. It's a pleasure to have you, Adrian. Thanks for joining us.
Yes, thank you, Trinity. Thank you for having me. It's actually Ariane.
Oh, Ariane.
Yes.
Okay, perfect. Well, thank you so much for that. What attracted you to play this role in The Night Agent?
I think I am myself of Iranian descent, so it was really exciting for me to be able to tap into that side of my culture because Noor is Iranian. She's fresh out of Iran. She comes into the night agent world in New York City, and it's all very new for her. So I think, yeah, getting to tap into that culturally, getting to speak the language was really cool for me and really exciting.
So when you first saw the script, you know, and then playing on a Netflix hit show, talk to me about how significant that is to play on such a hit show and what you're hoping that viewers will take away from watching it.
I think it was just such a warm welcome because there was such a huge fan base from the first season. Getting to come into that, they were really, like the cast and the crew, they were very warm. I think adding this storyline to the night agent world was really exciting because it was a bit of culture, something different, which Sean Ryan and the creators are very good at doing that, tapping into that. So yeah, I think just the merging of worlds was really exciting.
And you know, Noor is becoming a fan favorite. I mean, how does that feel as an actress, as you're curtailing this to really make this character come to life? How does that resonate with you?
I think I just want people to be able to see a bit of, I think we can all identify with the struggle of wanting to protect your family and wanting to keep your people safe, and that is exactly what Noor goes through over the course of the season. And I want people to be able to relate to her in a way where they're like, yeah, I know what that feels like. I know what that struggle is like. Pretty universal theme.
And talk to me about how the night agent, compared to your previous roles, fit in with the other roles that you have played with. How is this role specifically different, and what experiences have you gone through that have contributed to you playing Noor in the night agent?
The film that I had done prior to doing The Night Agent, it's a film called Tatami, which is also a story about an Iranian woman. So it was a pretty seamless transition in one world to the next. And this character is different in the sense that, like, she is way out of her comfort zone in this place where she's very new, people that she doesn't know who she can trust. It's a really different situation than, you know, my last role where she's an athlete and she's very comfortable, she's very in the zone. So that was exciting to me. Just get different layers, different dynamic characters are very exciting to me.
What are your favorite characters to play, and what attracted you to playing Layla and Tatami?
I think as female characters, I think there's something very enticing about the word strong, right? But at the same time, strength is being dynamic, it's being vulnerable, it's being not necessarily strong, like tough, but also, yes, and being vulnerable, being emotional, being tuned into your emotions. And I think that Noor, I think that Layla from Tatami as well are dynamic in that sense, so that's very enticing to me.
Were there any challenges that you faced as you were preparing for these roles? If so, how did you overcome them?
Ooh, I mean, learning judo for Tatami, that was like a 3-month stretch of just very intense training that I did.
No one wants to mess with you now, though, I'm sure.
Yeah, you don't want to mess with me now. No, it really was such a great learning experience because I tested my body to these limits that I never thought I could.
You pushed it to the brakes.
I pushed it so hard, and I was so grateful for all the community that I had around me. People were so willing and just so giving to me in that whole experience. And you do things that you never think that you're capable of.
Yeah. I mean, it's true because your body is your instrument, and you're able to take it to places that you never thought imaginable.
Exactly.
What's next for you?
Well, I'm actually gearing up to start a new project, a feature film that is very different from anything else I've ever done. I can't talk too much about it, but something very exciting and different is what I can say.
Are you sure you don't want to give our viewers a little bit of a nugget here, something to look out for?
It is in the vein of like a political drama. My character is a lot more delicate than past characters is what I can say. Something different.
I love that.
Yeah.
You're giving us a little teaser live on the air right now. It'll give everyone something to tune into. Well, thank you so much. I really appreciate you joining us on the show today.
Thank you for having me, Trinity.
It was a pleasure.
Thank you.
Now up next, American Healthcare REIT celebrates a milestone moment when it rings the opening bell. So don't go anywhere.
What changed in Unanchored is the advent of geolocation data on cell phones. And this was largely unavailable until, call it 2018, 2019. That data is so robust that you no longer have to only rely on tenant sales that are reported by the tenant. Now you can rely on customer traffic from cell phone data, which is incredibly robust, and it allows landlords to have information that we didn't have before. That, to me, is what really crossed the Rubicon between private investors making a local bet on convenience properties to now institutions, and us being the only public institution, really, being able to make a thesis that has math behind it that I think is convincing and durable. How frequently do you run an errand to go out at lunch and go to Chipotle? Do you go to the ATM at Wells Fargo? Does somebody in your family get your nails done? Do you go to the barber shop? These are running errands. These are not going shopping. For you to run errands, convenience is key. You want speed, access, and you want it to be in a timely manner. What we've really proven, and this is really through the data analytics, is that going shopping and running errands are two distinct, different property types. And being different property types, they deserve to have their own asset class for effectively running errands. And I'll give you some statistics. 2/3 of the customers that come onto our properties at Curbline are on our asset less than 7 minutes. That's not a going shopping experience. That's not lingering longer. We're not placemaking. We're not making a place where you linger forever or you multiple shop. We want a place that is right up on the road, easy to your house, and you're in and out. That is the biggest asset management question. Do you renew a tenant, or do you replace the tenant? And so this is not an occupancy business where you buy vacant buildings and you lease them up. You're buying fully leased buildings, and the question is always every single year, are you going to renew this tenant, or are you going to kick them out and replace them? And that.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, in just a moment, NYSE-listed American Healthcare REIT is going to kick off the first session of the week when it rings the opening bell. Trinity Chavez rejoins me now. And Trinity, what more can you tell us about why this does represent a major milestone for the company?
Well, many reasons, Kristen, but the company is celebrating its 1-year anniversary as an NYSE-listed company. Well, on NYSE American, that is, trading under the ticker symbol AHR. Now, American Healthcare REIT, a player in the healthcare-focused real estate investment trust in the United States, invests in outpatient medical office buildings, skilled nursing facilities as well, and senior housing communities across the country. So overall, American Healthcare REIT says it has well over 19 million square feet under management. And later on in today's show, of course, CEO Danny Prosky will sit down with us and talk to our viewers about what we should expect moving forward. Actually, Kristen, you're going to be speaking with him, so kind of preview that conversation with us.
That's exactly right, Trinity, so I'm really looking forward to that. We got the big green signage behind us and a lot to talk about, of course, as it is its 1-year anniversary. A lot also obviously transpiring in the market as well. We've seen some recent choppiness, so getting a sense as to how to navigate the current environment is always of the utmost importance. And of course, what is ahead for 2025? So there is a live look at the opening bell podium, Trinity, and let's take a listen as American Healthcare REIT does the honors and celebrates the opening bell. are officially off to the races here at the New York Stock Exchange. We are open for trade. American Healthcare REIT doing the honors. And we do see green on the screen, in fact, for the major indexes, fractional gains across the board, matching that background for American Healthcare REIT. So to talk more about the markets, I do want to bring in our markets guest, Sam Stovall. He's a chief investment strategist at CFRA Research. Sam, always good to see you. I know you have a lot of data that you come to these interviews equipped with, and based on where the market is trading now, what we saw in January, what should our viewers know?
Good morning, Kristen. Good to talk to you again. Well, January is a very good barometer, if you will, for the entire year. You can learn more about it at the Stock Traders Almanac. But essentially, the old adage is, as goes January, so goes the year. Especially in year one of the four-year presidential cycle. In that case, the market has gained more than 18% on average and has risen in price 91% of the time. So that's a good indicator, but obviously not a guarantee. And then you can add to that February. If this month does end up being positive as well, then essentially 97% of all full years were positive. Only 2011 slipped by 0.002%. So you could essentially say that all years except one were up.
Mm-hmm. What should investors make of the recent choppiness, though, Sam?
Well, I think that choppiness will be the key word for the year. When you look to year one of presidential cycles, about 90% of them had market declines of 5% or more, with the average being about 17%. I think investors are scratching their heads as it relates to tariffs. Are they still more bluster than bite? Are they still a negotiating ploy? Because let's face it, we got 30-day stays of execution for Mexico, Canada, China. Now with the threat of steel and aluminum tariffs, that too is a concern, although those groups represent a tiny fraction of the market cap of the S&P 500.
Mm-hmm. Of course, we've seen a wave of announcements come out of this new administration and a red sweep, in fact, in D.C. What is the right way to ingest that and respond to it, knowing that government cuts, we've already seen them, certainly in place?
Well, that's what the Republicans ran on, was to trim the expenses of government, and that's what they are attempting to do at this point. So I think what you basically have to do is not fight it, but sort of work with it. And that's what I believe investors tend to do. So essentially, realizing where cuts are likely to be found, where tariffs are likely to take the biggest bite, et cetera. So even though consumer discretionary was one of the three best performing sectors in 2024, and history says after an up year, you want to let your winners ride. So communication services, technology, financials, and consumer discretionary were the top performers. You might want to keep discretionary on the side because that's likely to be one of the sectors most heavily hit by tariffs.
Mm-hmm. February historically is one of the more volatile months on the calendar year. What do we typically see in February, and do you think that could pan out this year?
Well, February is the second worst month of the year for the S&P 500, going back to 1945, posting an average decline. The good news is that it has, like a coin toss, however, risen a little more frequently than it has fallen. September is the worst month with the deepest average decline, and it fell more frequently than it rose. Yet a down February does not guarantee a down year. Actually, the market has risen about 2.5% after a down February and was higher 54% of the time. But the nice indicator would be if we got a positive return, as I mentioned before, in both January and February.
Mm-hmm. And in terms of earnings, Sam, they continue to come in. We've heard from most of the Mag 7 companies. NVIDIA usually is the late reporter. What are your takeaways from this earnings season so far?
Well, management, once again, has done an excellent job of managing expectations. I say that because 9 of the 11 sectors have seen upward revisions to earnings estimates that were in place as of December 31st. Instead of getting an 8.7% rise, according to S&P Capital IQ estimates, Now we're likely to see a 13.7% increase, so a 500 basis point outperformance, which will probably make this the 61st of the last 63 quarters in which actual results have exceeded end of quarter estimates. And technology is expected to post about an 18% year-on-year increase in earnings this quarter versus the sub 14% for the market.
Sam, we did see the markets take a turn lower on Friday in the wake of the consumer sentiment report, seeing a full percentage point increase in inflation. In fact, how important is that report and what we saw in its contents?
Well, I think a lot of the things that we've been experiencing over the last couple of days have been important. Yes, consumer confidence. Yes, gold prices, because they are reflective of the concern regarding inflation and whether the Fed will indeed be slower to lower interest rates. This year, we're still expecting 2 rate cuts, one in the second quarter and one in the fourth quarter. But there is definitely a possibility that we end up with only one or none. So I think that is a concern. So we're in the third year of a bull market, and third years are typically very challenging. And so I would not be surprised if we do not, like the Kansas City Chiefs, have a three-peat, meaning 3 successive years of double-digit gains.
Wow.
History says that happens only about 1 in 5 times, with the average third-year gain being around 5%.
All right, we will be watching closely. Sam, always appreciate your insight and, of course, data that you bring to the table. That is Sam Stovall. He's the Chief Investment Strategist at CFRA Research. Well, stay with us because still to come, Tether is the world's most valuable stablecoin by market cap, and its CEO is going to join me to talk about how it is being used and the platform's recent expansion into the Middle East. Plus, American Healthcare REIT Chief Executive Danny Prosky is going to join me to discuss his firm's biggest goals in 2025 as it celebrates a year as an NYSE-listed firm. And although wintry weather across the Northeast this weekend didn't shut down the stock exchange, it did on this day in history more than 45 years ago. It's a story you don't want to miss. We'll be right back.
Welcome to Floor Talk. It's great to have you on the show.
Thank you so much for having me.
So, Josie, congratulations are in order. You are part of the Buffalo Bills ownership group. Now, it was a great weekend for you this past weekend.
Amazing weekend, yes.
Had the family with you to celebrate a win. So tell me, what drew you to this opportunity and how does it fit with your goals?
Yeah, so the process started for me actually back in 2018. I originally had set out to put a group together to purchase the Real Salt Lake soccer team. And it was through that experience where I was approached by a representative from the NFL asking if this is something that I'd be interested in, as the league was looking to be more diverse in the type of LPs they accepted. So right away, I fell in love with the opportunity, and it went quickly, but I'm happy it did. And it's an honor to be a part of such a world-class organization.
Now, you're also involved in ventures like TGL, SailGP, and Footy Market. So tell me, how do you choose what to pursue, and what's your vision as an entrepreneur?
I tried to stick to things that I'm passionate about. And Footy Market is a gear exchange where you can buy and sell used gear online. And that one was close to my heart, being that I spent, my whole life dedicated to soccer. And I'm a big fan of emerging sports. TGL is obviously, golf has been around a long time, but TGL is like a new variation of the game, right? Trying to give viewers a different experience. And then SailGP is more of the same. It's something that we've known people are passionate about in terms of sailing, but now trying to package it all as a league and an emerging sport is something different. So super excited at all of my ventures and things that I work on. And, for me, it's another way of being on a team. It replaces being on, a field. So I've been having a ton of fun, and, it's just the start.
And Josie, as you grow your business portfolio, how are you building a legacy that's beyond?
Welcome back to NYSE TV Live. I'm Trinity Chavez at the Exchange. Now, Redwire is making a bold move, acquiring Edge Autonomy to become a leader in multi-domain autonomous technology. Now, this deal combines Redwire's space platform with Edge's airborne systems, creating an end-to-end defense solution powered by AI. CEO Peter Canito recently joined me on Taking Stock to break it all down.
many of the people who have been tracking Redwire know, but for those who haven't been, last April, we announced a very low Earth orbit satellite program that we were developing that people started referring to as an orbital drone. And it was very interesting because Redwire has traditionally been a space infrastructure company with a variety of different spacecraft platforms in the various orbits in space, such as low Earth orbit, medium Earth orbit, and geosynchronous Earth orbit. And when we started moving into what's called very low Earth orbit, or VLEO, and people started referring to our spacecraft as an orbital drone, it really occurred to us that in many cases from the defense tech part of our business, it was very arbitrary, this idea of offering solutions or these platform solutions in space versus airborne solutions. And so when we came across Edge Autonomy, we realized that by adding a company like Edge Autonomy, we would then become a multi-domain defense tech company that really spanned from the surface of the Earth all the way to the surface of the moon in our offering of these, let's call them above Earth platforms. And that was very unique and a positioning in the marketplace that we haven't come across yet. So we thought of it as a really highly differentiated strategic competitive advantage we could build by doing this M&A.
And how does combining Redwire's space platforms with Edge Autonomy's airborne technology position the company to better serve national security customers?
The national security strategy has been migrating towards a concept that they call joint all-domain warfighting. They have a program concept called Joint All-Domain Command and Control. And the idea is that when you're developing a national security strategy, you don't want to have stovepipes between the different domains of air, sea, land, space, and cyber, for instance. So you're really looking to have a multi-domain or all-domain capability. And by vertically integrating airborne platforms within a agile middle market company like Redwire that already has space-based platforms, you now have the potential for fully integrated, vertically integrated, multi-domain platforms where space craft or satellites can be operating through connectivity with airborne systems like Edge Autonomy's UAS systems to kind of collaborate in this autonomous way to get better coverage of the battlefield.
And as you mentioned, with this acquisition, Redwire now spans to space, air, and defense systems. So what advantages does this end-to-end capability provide to the warfighter and defense agencies?
Yeah, so if you think about each platform brings a unique benefit to the fight. Space-based platforms are what some will refer to as the ultimate high ground, right? Because you have a very high, wide area view of Earth, and by extension of the battlefield. However, when you move into space, you give up certain performance parameters, like, for instance, resolution. Whereas the closer you are to Earth, your imaging has higher resolution and therefore higher accuracy. By one example of how combining them into an integrated system is you can use spacecraft to surveil a very wide area, and then if they detect something, communicate potentially with a uncrewed airborne system to move into that area where the detection occurred for a higher resolution image of what's happening on the ground. And that's just one example. There are other examples that have to do with where satellites can provide longer communications range for airborne systems because they have the ability to communicate over the horizon using space assets instead of a direct communications link. So there's a number of different dynamic missions that are enhanced when these two domains in a multi-domain construct are collaborating.
Now, Pete also says that they are implementing first-in-class technology and AI to connect autonomous drones with spacecraft to provide real-time actionable data. Now, up next, we're going to speak with today's bell ringer about his biggest goals for 2025. So stay tuned. Here at Money 2020 in Las Vegas, one of the big key topics of today's discussions and panels, obviously, with blockchain, cryptocurrency, and the regulation around that. Talk to me about what you're seeing right now in the sector.
I think that the sector is definitely maturing, at least globally, to the point of mass adoption. Of course, like we've been seeing this first and foremost in crypto adoption globally, that I think outside of the US, we are seeing a lot of countries, whether it's Europe, Latin America, and Asia, putting fairly good regulation in place. And on the back of that regulation, we are seeing a lot of adoption. I think that the most interesting part right now is that we are seeing a lot of adoption of stable coins for payments, which is very relevant for this conference, of course. But on Fireblocks, now more than 50% of the volume that we are processing, which is about this year, we're going to process $2.5 trillion worth of assets that are going to move through the platform. More than 50%, so 1.25 trillion, is actually stable coins, which is used for international cross-border payments.
Can you tell me more about what your expansion plans are from your vantage point, especially when it comes to DeFi?
DeFi has been at the forefront of what we were doing at Fireblocks. We have several hundreds of clients that are interacting with DeFi through the platform because it gives them better liquidity, better opportunities. And what we are been doubling down on is two main things in DeFi. The first one is to provide secure access and to enhance the security around DeFi. So as most people that are somehow familiar with the space, a lot of the hacks and a lot of the issues that we were seeing in crypto are related to DeFi. So creating the perimeter around the security and compliance that's such that it's...
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Well, we do see fractional gains across the board, the tech-heavy names leading the charge today. And of course, we've got a whole bunch of earnings data and economic reports on tap this week that we'll continue to follow here on the show. Earlier this hour, NYSE-listed American Healthcare REIT rang the opening bell to celebrate 1 year as a publicly traded firm. And joining me now with more is Danny Prosky. He's the CEO and president of American Healthcare REIT. Danny, thank you so much for joining.
Good morning, Kristen. Thank you so much for having me.
Congratulations, an incredible milestone to celebrate. What has happened over the past year?
Well, it's been a great year for American Healthcare REIT. We IPO'd almost exactly 1 year ago, raised a substantial amount of equity, used the majority of it to pay down debt, so our leverage ratio has come down considerably over the last year. Since that time, we've gone back to the market. We conducted a follow-on in September, raising additional capital, and we have an ATM that we've been accessing as of late last year. So we've raised a substantial amount of equity, we've delevered, and we've grown the company a lot as well during that time period. We've added about $650 million of assets last year, and our hope is to continue with external growth going forward. That's certainly what we plan to do. But I think the biggest news for us over the last year has been organic, internal growth. I've been in this business for a long time. It's been about 33 years. And healthcare REITs in general, not just us, this is the best environment I've ever seen. For those of us that have a lot of managed long-term care, which is our primary focus, meaning skilled nursing, assisted living, and even independent living, the supply-demand fundamentals are fantastic right now. The baby boomers are approaching 80 starting next year. And we've seen very little new supply over the last 6 years as far as new development is concerned. So lots of demand, not a lot of supply. Occupancies are up, RevPOR's gone up, margins have been improving, NOI is up. So that's been a big part of our story. That's one of the reasons you've seen such an increase in our stock price over the last 12 months.
What are your goals for 2025?
Our goal is to continue to delever. We've done a lot, but I think we'd like to do a little bit more. And to continue to grow internally and externally, but to do it accretively. There's lots of acquisition opportunities. What we're doing is trying to find the best ones that really not only add to the quality of the portfolio, but earnings as well.
And I did see that you recently won the Healthcare Real Estate Insights 2024 Executive of the Year. So congratulations on that as well.
Thank you very much. It was very exciting. I wasn't given much notice. It was unbeknownst to me. Someone was nominated me, and I was fortunate to win, and it was very exciting.
What goes into leading in this industry?
I think it's a combination of things. I think a big thing is experience. I mean, we're a real estate company, right? We're a REIT, but we're a healthcare REIT. We focus on clinical healthcare real estate where patients are being seen by providers, and it's a complicated business. So it's not, you need to understand the real estate side of it, but you really need to understand the operations, the healthcare delivery, the insurance, because that all affects our real estate. So, you know, it's important to us that we have tenants or residents are able to pay the rent, which is how we create earnings for our shareholders. And it's a very complicated business. I started out as a young accountant in 1992, didn't know what a REIT was, knew very little about healthcare in general, and it takes years, if not decades, to really understand our system. And I think that's what kind of separates out the more successful REITs versus the less successful ones, is being able to understand the business and kind of see the direction that it's going.
Danny Prosky, he's the CEO and president of American Healthcare REIT, celebrating here the opening bell today. Danny, thank you so much.
Thank you, Kristen. I really appreciate it.
Great to have you. All right, Tether, which boasts the world's biggest stablecoin by market value, is expanding its footprint. The platform making news this past week by announcing a collaboration with UAE-based Realtech in efforts to change the game when it comes to real estate transactions. Joining me now with more is Paulo Arduino. He is the CEO at Tether. Paulo, it's great to have you.
Thank you very much for having me, Christine.
What more can you tell us about this partnership?
So this partnership is very important because we have seen over the last years how USDT, our core product, the first stablecoin and biggest stablecoin in the market, has grown to be a store of value for hundreds of millions of people around the world. But as of today, the use cases of USDT and stablecoins in general are growing very fast. From trade finance, as we announced a deal last year of financing trade finance deals for oil trading, for example, to real estate. And we have seen how Dubai and Abu Dhabi have been growing as two important locations for business in general, for real estate. The two places and the two cities are in great development. And so real estate is moving towards a better solution for payments and for closing deals, that is stable coins.
Now, how would you describe the stablecoin industry, Paulo, to someone who might not be familiar?
That's a good question. So in 2014, Tether, so my company, created the first stablecoin with a simple idea. Let's put the dollar, the US dollar, that is the most used currency in the world, the most important currency in the world, on a blockchain. That was the technical innovation created by Bitcoin. And so over the last years, we have seen how this digital dollar, USDT, has been fundamental for people living in emerging markets in developing countries as a way to protect themselves from the devaluation of their national currencies. Think about a person living in Argentina with the Argentina pesos that lost 98% of its value against the dollar over the last 10 years, or the Turkish lira lost 80% of its value against the US dollar in the last few years. And so this is what we created, a better dollar, more transparent dollar on blockchain rails, a dollar that is buying back the US debt at an incredible pace. Right now we have more than $110 billion in US Treasury bills. Every single person in the world that now is using USDT is, instead of using cash, we take the money and we buy back the US debt. So we are very proud of our innovation because it's very unique, it's helping the dollar hegemony, is helping strengthening the dollar while many other countries and players, foreign players, are selling T-bills. We are among the biggest buyers. We are around the 17th buyer in the world of US Treasuries.
What makes Tether different from other stablecoins?
I think Tether has been focusing on what matters the most. So while other stablecoins have been focusing on the domestic market in the US, trying to compete with PayPal, Zelle, Cash App, and 10 or 15 other payment methods, Tether understood that the power of stablecoins is actually bringing the dollar to the people that need it the most, people and families that are left behind by the banking system. There are 3 billion people in the world that don't have access to any financial rails, not because they are bad people, simply they are too poor of being interest of any bank, because they don't generate enough commissions and fees on a yearly basis. And USDT is the savings accounts for these people. USDT is the checking account of these people. And that's why we have more than 400 million people living in emerging markets and developing countries using USDT on a monthly basis, and 35 million new people, new wallets are created on USDT on a quarterly basis.
So certainly we've seen a lot of change coming out of our nation's capital just in the past 6 weeks or so with a new administration. How does that change your expansion in the U.S.?
Well, recently you could see our investment in Rumble. We are very excited for that. That is going to be one of the best social media companies in the world. Rumble recently announced, for example, Rumble Wallet. That is a product that is dedicated to people interested in Bitcoin and in stable coins. It will be a very beautiful product, polished, simple to use for everyone. Not one of those products that are made for speculation, but it's a payment product, it's a payment wallet made for the people in America first.
Paulo Arduino, CEO at Tether. Paulo, thank you so much for joining.
Thank you for having me. Have a great day.
You too. Long before the days of working from home, the weather would make or break your workday, especially when it came to nor'easters in the winter. On this day in history, 1969, also a Monday, the New York Stock Exchange did not open after a particularly brutal nor'easter struck the city, dropping nearly 2 feet of snow and paralyzing the city's transportation for days. The storm also delayed the NYSE opening by an hour the following day. We see snow outside on the ground today, of course, after a snow over the weekend, but we know spring is around the corner. It's going to do it for today's show, everyone. Thank you so much for watching. As always, markets up fractionally on the day. We'll have a lot of action in store over the course of these next 4 days between earnings and economic data. It's going to do it for today's show. We'll see you back here 9 a.m. Eastern Time tomorrow. For the whole NYSE TV Live team, thank you for watching.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing. This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.